PayPal has jumped 40% in 2024. But what's really happening with this stock? Can it bounce back from its 85% drop from the all-time high? Or will the recent surge be short-lived? Let's start with the basics. PayPal Holdings, ticker symbol PYPL, is a global digital payments platform. It's not just about sending money to your friends anymore. PayPal has evolved into a comprehensive system for online, mobile, and in-person payments. PayPal's journey began back in 1998, riding the wave of the early internet boom. Its original mission: to simplify payments on eBay. But how times have changed. Today, PayPal's reach extends far beyond its eBay roots. It's now a powerhouse in the financial technology sector, owning popular platforms like Venmo and Braintree. One of PayPal's key strengths is its ability to facilitate payments in numerous currencies worldwide. This has made it an essential tool for international commerce. So whether you're a small business owner selling handmade crafts or a multinational corporation, PayPal's got you covered. They've built a reputation for security as well, with robust fraud protection and encryption measures that gives users that all-important peace of mind. Now, let's talk IPOs and a certain billionaire named Elon Musk. PayPal went public on February 15th, 2002, using the ticker PYPL. This wasn't just any IPO, it was a bold move in what was the aftermath of the dot-com bubble burst. Despite the tech sector's bruised reputation, PayPal's IPO was a hit, raising over $70 million, with the stock price jumping more than 50% on day one. But where does Elon Musk fit into all this? Well, Musk wasn't directly involved with PayPal at first. He founded X.com in 1999, an online payment company that merged with Confinity in 2000. Confinity had this little service called PayPal, which quickly became the star of the show. The company rebranded as PayPal, and the rest, as they say, is history. Fast forward to today, and PayPal boasts a market cap of $80 billion as of September 2024. This makes it the 237th most valuable company globally by market cap. Not too shabby for a company that started as a way to pay for Beanie Babies on eBay, right? Now, let's talk growth. After a sluggish start post-IPO, PayPal's first major uptrend kicked off between 2017 and 2019, with the stock climbing a massive 175%. So what fueled this growth spurt? First, mobile payments exploded. As smartphones became commonplace, PayPal capitalized on the trend, especially through Venmo. Remember when splitting the dinner bill meant a complex dance of cash and IOUs? Well, Venmo changed all of that. It became the go-to app for millennials and Gen Z, making person-to-person payments as easy as sending a text. When the COVID-19 pandemic hit in late 2019 and early 2020, global panic caused the S&P 500 to drop 35% in just 2 months between February and March 2020. However, like most black swan events, the market eventually stabilized. It absorbed the chaos and continued the long-term bull trend that had been in place since 2009. As we entered lockdown and shifted online, the market rallied, particularly benefiting the tech sector. During this time, PayPal experienced a massive 275% rise between the low of March 2020 and the current all-time high in July 2021. With the world in lockdown, e-commerce flourished, and PayPal was there to process all those payments online. The pandemic accelerated the shift towards digital payments. Suddenly, touching cash seemed as outdated as a flip phone. PayPal's contactless payment solutions, including QR code payments, became not just convenient, but necessary. Restaurants, small shops, and even street vendors started accepting PayPal payments, expanding the company's reach into previously untapped markets. PayPal's financial performance during this period was nothing short of stellar. New active accounts skyrocketed and revenue growth followed suit. In Q2 2020 alone, PayPal added 21.3 million new active accounts, a 137% increase year over year. The company processed $222 billion in total payment volume, up 30% from the previous year. Investors simply couldn't get enough of PayPal, driving the stock to dizzying heights. Then things went rapidly south. Between June 2021 and October 2023, PayPal experienced a hefty 85% decline from its all-time high of around $310 to a low of about $50. Now that had to sting investors. So what caused this massive drop? Well, as the world started to normalize post-pandemic, so did the growth rates in digital payments. The extraordinary surge PayPal experienced during lockdown wasn't sustainable, and reality set in. People started going back to physical stores, and the explosive growth in online shopping began to slow. Competition in the digital payment space heated up, with tech firms eyeing their slice of the pie. Apple Pay and Google Pay gained traction, and new fintech startups entered the market with innovative offerings. Market saturation became a concern, and investors started questioning PayPal's ability to maintain its edge in an increasingly crowded field. Furthermore, PayPal faced challenges in its relationship with eBay. The online marketplace, once PayPal's parent company, began transitioning to its own payment system, Adyen. This move put pressure on PayPal's transaction volume and raised questions about its ability to retain large platform partners. The broader economic environment didn't help either. Rising interest rates and fears of a recession made investors wary of high-growth tech stocks. PayPal, which had been priced for perfection during the pandemic boom, suddenly looked expensive in comparison to its peers. But are we now seeing a change in fortune? Since hitting that low in October 2023, PayPal has climbed 56%, with 40% of that growth happening this year alone. So what's driving this resurgence? For one, many investors saw PayPal as undervalued after the massive decline. The company's management seems to agree, as they've been aggressively buying back stock. These buybacks have boosted earnings per share, making the stock more attractive. In 2023 alone, PayPal repurchased approximately $5 billion worth of shares, demonstrating confidence in the company's long-term prospects. PayPal's also been focusing on strategic initiatives, investing heavily in artificial intelligence and machine learning to improve fraud detection and streamline operations. They've also been expanding their cryptocurrency offerings, allowing users to buy, hold, and sell various cryptocurrencies directly through the PayPal app. Another key factor in PayPal's recent upswing has been its focus on cost-cutting and improving operational efficiency. The company announced plans to reduce its global workforce by about 7% in early 2023, a move aimed at reducing expenses and improving profitability. This strategic decision has been well received by investors who see it as a sign that PayPal is serious about maximizing shareholder value. So the million-dollar question, is now the right time to buy PayPal? Well, it depends on your investment strategy. If you're all about fundamentals and believe in the undervalued thesis, you might already be buying. The company's price-to-earnings ratio has come down significantly from its pandemic highs, making it look more attractive on a valuation basis. Plus, PayPal still dominates in the digital payment space, processing billions of dollars in transactions every day. But for those of us who lean more towards technical analysis, the picture is a little bit different. Despite the recent 56% rise, PayPal has been trading sideways for about 18 months. The stock needs to make a significant move to the upside to confirm its next uptrend. We're talking about another 30% climb to break out of this sideways market and push above the $100 round number resistance level. Jumping in now could mean getting stuck in a sideways market with little growth, especially if the stock reverses back towards its all-time low. However, the stock is trading above the 200-day moving average, which does give it a bullish bias, indicating that the long-term trend might be turning upwards. Personally, I'm waiting for PayPal to continue forming its base and then break through that $100 resistance. If it does, we could be looking at a potential 210% rise back to its all-time high. Patience is key here. Remember, successful investing often comes down to waiting for the right setup, not just jumping in because a stock has had a recent run up. A great example is Nvidia, which we've held since early 2023. Nvidia experienced a 70% decline between 2021 and 2022, then stabilized at the recent 10-for-1 split adjusted price of $10 by the end of 2022. It broke out at the start of 2023 and has since increased by about 1,000%. PayPal has the potential to also rise similarly, but we need it to move above $100 first to confirm the start of the next uptrend before we consider a position. Remember, while we wait for PayPal to set up, there are other stocks ready for growth. Meta has reached record levels and is nearing $600. Apple is close to its all-time high, with both stocks competing in the tech sector. Click the video to see which one is the best investment option as both stocks begin to form their next uptrend.